Hi guys, welcome to this video. My name is Mason Minervini. I am a loan officer here with Louisiana Mortgage Associates. Today I just want to go over a little bit about the pre-approval process. So what is a pre-approval? A pre-approval is simply we get your personal information, we get your information about your income, your job, all that good stuff. And we use that along with your credit report and your debts to come up with an amount that you're qualified for. This also allows us to tell you any special programs. There are a lot of mortgage programs out there. There are conventional programs, special conventional programs for first-time homebuyers. The FHA loan, USDA rural development loans, VA loans. There's a ton of them. And one thing you want to know is which programs are you qualified for? Because some of these programs require no money down, some of them require lower money down. But in a lot of cases, they have different requirements for them. Some of them have income limits. Some of them allow you to buy in certain areas, but not others. So it's a good thing to do up front. That way you know what you're getting into. The pre-approval is going to tell us how much you're qualified for based on the income that we can use for you. Now, the reason I say the income we can use for you is a lot of times we get these people that have already spoken to a bigger online mortgage company where they did their application online. They didn't actually speak with the loan officer. And when it comes to the point where they ask you how much income you make per month, you may say 10,000. That includes some per diem, that includes some overtime, that includes some bonuses. The issue with that is they're going to qualify you based off what you told them. If you told them you make $10,000 a month, they're going to qualify you assuming you make $10,000 a month. The problem is if you didn't know those things, you didn't know that if you didn't work at your job for 2 years, you can't use any overtime to qualify. Or if you haven't been there for 2 years, you can't use any bonuses. You can really never use per diem because it's not taxable. They don't tax the income. Um, so these are some ways that they can tell you, hey, you're approved for 400,000, and then you come to us and we tell you you're only approved for this amount. And the reason why is because we're going to be more accurate. We're going to ask you those questions. We're going to ask you what your base pay is. What is your base hourly pay? A lot of people we have around here, especially in the industries, you only make $20 an hour, but really you're making close to $7,000, $8,000 per month with all the overtime, all the hours you're working. And again, there's only certain cases where you can actually use all this income. So to be able to get an accurate pre-approval amount, well, we have to ask the right questions. Now, if you're not asked the right questions and you do that, you say I make $10,000 a month, they give you a pre-approval for $400,000. You spend a week or two making offers, going back and forth with the sellers. You get the contract approved. Everything's good and gold. You submit that contract to your lender. They ask you for your tax returns and your pay stubs and all that good stuff. You're 2 weeks in the process, and they find out actually you don't qualify for this loan anymore because you told us you made 10 grand, but all we're really allowed to use is 5 grand or so. So that's a reason it's good to speak with the local person, someone who's going to ask the right questions, someone who's going to know the different requirements, the different income limits. Another thing we can do is, within 30 minutes after we get your information, we can get you pre-approved. We're going to let you know what special programs are. Look, a lot of people still think it's the 1990s and they need 20% down, and that $20,000 house is going to cost them $40,000, $50,000, $60,000 down, and that simply is not the case anymore. There are a lot of programs for lower money down, like 3% programs, 3.5% FHA loan programs. That really on a $200,000 house you really only need about $6,000 or $7,000 down. So a lot of people, they spend a year or so trying to get this money together. They got to get pre-approved for a loan. They say, look, we could have bought a year ago. We've been waiting this whole time because we were trying to save up the money, and we didn't realize we would only need 5,000, 5%, 10%, whatever it may be. So that's another good thing. It lets you know what you're going to be getting yourself into, how much money you're really going to need for closing. The other thing the pre-approval is going to do is let you know what your payment's going to be. A lot of people want to buy a $500,000 house, but there's not a lot of people that are willing to pay a $500,000 mortgage note. The thing about this is there's a lot of misinformation online. When you go to Zillow or Trulia or some of these websites, it'll say this house is $225 and the expected mortgage payment is $1,200 a month. That expected mortgage payment, if you look at the fine print, is based on an 800 credit score with 20% down, getting the best rate. It's also based off of wrong information. It's going to tell you the property taxes based off of what it's currently assessed at. Property taxes and homeowners insurance is something that's going to be included in your mortgage for most of the times. So if those things are included, those need to be known so that you can accurately predict your mortgage costs monthly. If they're using an old assessment of that property that says that it's only assessed at $100,000, the property taxes are $30 a month or whatever it is, they're going to use that to estimate what your payment is. But realistically, whenever you purchase that home, it's going to be reassessed for the new value. Now, once it does that, your property taxes aren't going to be what they used to be. They're going to be much higher. So to accurately predict what your monthly payment's actually going to be, you need to know those things. A lot of these companies are based out of Silicon Valley and in different places. They're not based out of here. So they don't know what property taxes cost in Calcasieu Parish. They don't know what homeowners cost typically in let's say Louisiana. They just don't know these things. They're not from here. They don't live it every day. So that's why it's good to use a local person, because they can accurately predict this information. You don't ever want to go into a mortgage process thinking that your payment's going to be $1,300 and that's the top of your budget. That is the most you're willing to pay monthly for your mortgage. You get under contract, you get under processing, you pay for your appraisal, the title work's finished, and you find out that based on the new property taxes, based on the homeowner's insurance cost, your payment's going to be $1,400 or $1,500 a month because you were given an inaccurate estimate up front. And that could be a shock to some people to know that happens a lot. So misinformation online can definitely make you makes it hard to understand what your payment's going to actually be. So getting approved, like I said, it's very simple. We got a number of ways to do it. We have a mobile app. You can do it through email. We can call you and get the information over the phone. It only takes about 30 minutes. We enter the information in. We get your credit report, review your scores, review all your debts, and that's how we accurately predict what your mortgage approval is based on how much money you make per month, what your monthly debts are already, and then what your prospective housing payment's going to be. We give you a pre-approval based on that, and then you can go shopping, you can go look at houses, you can go make offers. Again, none of this requires you to upload any documents or produce any kind of verification documents up front. This is just simply to get the information that we need to tell you what you're approved for. I cannot tell you how many times I've spoke to real estate agents or buyers that have spent 2, 3, 4 weeks looking at houses every weekend and making offers and negotiating back and forth, and come to find out they're not approved for what they're looking at, or they are approved but the payment's way more than they ever expected or ever wanted to pay. So getting approved up front is definitely going to alleviate a lot of that stuff. It's definitely going to give you the information you need going forward. Like I said, what your payment's going to be, what to expect for your down payment, what special loan programs you may qualify for, and all that good stuff. That way, you're not 2 weeks into a mortgage process finding out you got denied because you overestimated your income, or you're using income that you can't use because you haven't been on your job long enough, or whatever it may be. So look, just give me a call, shoot me an email, whatever. My number is 337-312-1335. That gets you directly to my office. My cell phone number is 337-244-1544. And my email address is Mason, that's MASON, at swlahome.com. Get in contact with us. Like I said, we can get you pre-approved in as little 30 minutes, and you can go to that showing armed with the information you need to accurately make an offer and all that good stuff. Thanks for watching. Have a great day.